Okay, so what we've been working on for the last couple days is doing these T accounts, right? And just kind of getting better with figuring out what is being debited and what is being credited. So again, whenever you do a transaction, there is always one debit and one credit. So if you can figure out one of those two, or like think of it as plus and minus, or plus and plus, or minus and minus, as long as you figure out one, usually you can get the other one quite easily. So here's the thing. Most accountants don't actually use T accounts. T accounts, I introduced the idea of debit and credit using a T account, but most accountants use general journals instead of T accounts. So we're going to stay with the same thinking, but instead of writing the information in a T account, we're now going to put the information into a general journal. So the learning is the same. Every transaction has a debit and a credit, but now we're going to write it into general journals instead of into T accounts. Okay, so it's not, T accounts are just a useful introductory skill, but it's not where we stay. So what a general journal looks like, again, you put the name of the company on the top line and you put the date on the bottom line. Okay, so what a general journal looks like, you've got the date here, you've got the account title. Don't worry about post ref right now, we'll talk about that later. And then you've got your debit column and your credit column. Okay, so we'll go back to the snow removal business. Okay, so Gurpeat Snow Removal. So we've got our 3 asset accounts, our 2 liability, our 3 owner's equity, our 1 revenue, and our 3 expenses. So what we have to do first is we have to put the opening balance into the general journal. Okay, so you have to remember assets are debit, liabilities are credit, capital is credit. Now, these ones, they do not have an opening balance. Okay, so these ones, we don't have to worry about these ones for right now. Okay, we'll eventually have them be having opening balance, but for right now, we're not going to worry about it. So in our last module, I taught you how to open up a general journal with the opening balances. Okay, so this first part you've already seen before. So here's our balance sheet. So again, all of these are going to be debit. These and this are going to be credit. So the way it looks like this. So we did this in our last unit, but just to remind you. So what you do is you always do the debits first. So we're going to do our 3 asset accounts, putting the balance in the debit column. And then what you want to do is you want to indent the liabilities and there's the owner's equity, and you put those balances in the credit column. Okay? So you're simply going from a balance sheet or a T account to now a general journal. And then the last thing you do is you always want to explain what you did. So you could write balance sheet, you could write opening balances, anything like that. Okay? So what we're going to do now is we're going to do our transactions onto a general journal instead of into a T account. So a T account is just the introductory skill. What most accountants do is general journals. Okay? So when you are doing a general journal entry, you always do the debit first and you do the credit second, and the credit is always indented. Okay? And how you indent, just hit the space bar like 3 times. Don't overthink that. Okay? Okay. So we're Gurpeat's snow removal service. Okay? We use his company just because it's an easy company to deal with, and if we keep coming back to it, it kind of stays familiar for you. So he repaid his parents $100. Okay, because remember, one of his accounts is that he owes his parents $1,000. Okay, so what we've been doing in lesson 1 and lesson 2 is he gave his parents $1,000, right? So we have been saying, so the checking account, so the cash is going to go down by 100, or in other words, we're going to credit cash, which means we're going to debit accounts payable, right? Because every transaction has to have one credit and one debit. So instead of doing this, so we're no longer going to do a T account, what we're now going to do is this. We're going to do general journal. So you always do the debit first. So you do the debit first. So accounts payable parents gets debited 100, and then you indent for the credit checking account $100. So now you'll see a debit credit. Now, what everybody forgets to do is that, and it's called your source document. So in the question, you will be told the source document. So it says the check is his source document, and it's check number 001. Okay, so you can either write, so just check 001. Okay, so you just write the source document. The reason why you need this is because most businesses will have something called an audit performed on them. So you need to be able to prove where you got that information from. Okay, so as far as our government goes and our taxation system in Canada, you can be audited for up to 7 years. So if you start a business this year in 2025, the government can come back on you for the next 7 years, so it's until 2032, and ask for any of your records from 2025 to 2032. They can come back to you for 7 years. So you need to keep all your documentation and all your source documents for 7 years. So most businesses have like 7 file folders, kind of like my black boxes over there, and they have one for each year. And each one has like January, February, March, and each one of them has the source documents for each month of the year. And then they file that away at the end of the year, and they just keep those 7 boxes rotating because the government can come back and say, hey, I want proof that you gave your parents $100. Okay, now, is the government going to come after you for $100? No. But when we think of large businesses, and we're talking about hundreds, thousands, millions, you want to be able to trace back everything. Okay, so that's what we're doing. We're going to keep with transactions, but instead of doing a T account, we're now going to record it in a general journal. Okay, so let's do a couple together to make sure that you're understanding. So it says on March 6th, so that's the date, Gurpreet bought gas for his truck, and he used his debit card to withdraw money from his checking account. Okay, so here's his receipt from the gas station. You can see he bought $75 worth of gas. So he used his checking account, right? He used his cash. So the checking account and truck expense are the two accounts that we're using. Okay, so cash is going to go down by $75. It's being credited, which means truck expense has to be getting debited $75, right? Because you need one debit and one credit for every single thing that you do. So on the general journal, you always do the debit first. So on the general journal, so right here, so it's March 5th. So, oh, no, sorry, we're on March 6th now. So we do March 6th. So we have truck expense, and we debit it $75. And then you're going to indent just a little. Checking account, credited $75. And my source document is debit card, gas for truck. Okay, so I'm going to write here, so my source document is debit card gas for the truck. Okay, so why is that a good source document? Because he could now go back and look at his bank records and see that he used his debit card on March 6th for $75 worth of gas for his truck. Okay. Now, you do have the option. Some kids like to leave an empty line between transactions to make it look a little neater on the page. Whether or not you want to leave a blank line between transactions is entirely up to you. But what is non-negotiable is the debit comes first, the credit comes second. Okay. Okay, make sense? Okay, let's do another one. On March 10th, Gurpreet withdrew $50 from his checking account for his personal use. So remember, he's the owner of the company. So the checking account, okay, he withdrew $50 from the checking account. So he is going to credit $50. Okay. So which account is going to get debited $50? When the owner pulls money out of the company, what account is that? Remember? It's drawings. Drawings is when the owner pulls money out of the company. Okay? So, the way it gets recorded, so it was March 10th. We have got what's his name? Gupta or Gurpreet, comma drawings, debit $50. I'm going to indent checking account, credit $50. And my source document is, I'm just going to write First Shore Bank because there's no other information on here. So I'm just going to write First Shore Bank as my source. Okay. So before I let you loose on the assignment, I figure what we would do is just practice one more time, seeing if we can figure out what is being debited, what is being credited for the transactions. We'll just do that, and then we'll go from there. Oh, there's another one here. Okay, let's do one more here. Gurpreet received $50 cash from his first customer for removing snow. So he received $50 cash. So we know then that cash is going to go up. Whoops. Cash is going to be debited $50, right? Because it's going up. So when you receive cash from somebody for doing a job, and that job is the whole point of your business, what is the other category that we use? What's the names of his accounts? So it would be sales, right? So sales is the other account that we would use. So sales. So if I've debited cash, I'm going to credit sales. Okay. So again, the way that we fill in, so we've got the checking account is being debited $50. Sales is being credited $50. And the source document, and it says right here, use receipt number 001 for the source document. So just write receipt number 001. So it's the same thing that we've been doing the last 2 days. Figure out what's being debited and what's being credited. It's just instead of writing it in a T account, now we're going to write it in general journal, which is typically what most accounting firms do. So we started with T accounts just so you could physically see the left side and the right side. But moving forward, we're not going to do T accounts anymore. We're going to use general journals. Okay. Okay, so let's just do this little activity together. Okay. So again, we're staying with Gurpreet's business. Okay. So we've got these transactions. So you can either just do this with me. So if you want to flip back to the first page of your notes and look at the names of his accounts, you received $200 for snow removal service. So what's going to be debited? Right? The checking account's going to go up. What's going to be credited? The sales, the revenue, and that's also going to go up. Right? Paid $50 for gas and oil for the snowblower. Okay, so you paid 50 bucks using a check. So that would be your source document. You would write check 002 for the source document. So your cash account is going to go down. So cash or checking account is going to go down by 50 bucks. So that means your debit, what's snowblower expense? Okay. So snow blower expense is what gets debited. Okay. Received $150 from snow removal. So again, a customer job. So this one and this one are done the exact same way. Okay, because you received 150 bucks. So checking account is getting debited. Sales revenue is getting credited. You paid the bank 100 bucks for amount owed. So if you look at one of his accounts, one of accounts is bank loan. Okay, so this is not the payable to his parents, this is bank. So you paid the bank $100. So your cash is going to go down, right? So that's why it's being credited. And bank loan is getting debited. You paid $75 for gas for the truck. So cash again is going to go down, so that's a credit. Gas for truck, that would be a truck expense. Okay. You received $100 for snow removal. So again, anytime you get money for services rendered, it's cash and revenue. Okay, so cash checking account is going to go up. Sales revenue is also going up. It's being credited. Paid his parents 100 bucks. So that's the accounts payable to his parents. So since he's paying his parents, you're taking $100 out of your checking account. So your checking account is going to go down, which means accounts payable parents is going to get debited. Okay? The nice thing about general journals is because everything has to have one debit and one credit, you don't have to worry about it balancing out at the end because you're always making it one debit, one credit. Where you can screw up is using the wrong account. That's where you can screw up. But if you can understand which two accounts are at play, you should be good. Okay, so what we would do here is you would just put the date on. I'll just do the first one. So we would go March 16th as the date. Now I think the question said you're on General Journal page 2. So where that comes in is right here. Okay, those page numbers are going to become important in another couple days. So again, do the debit first. So we're debiting checking account. Don't shorthand, I'm just feeling lazy. And we're crediting sales. So again, just indent that. It is $200. And the source document is receipt number 002. And then for me, I like to skip a line just because I like it spaced out. And then I would start the next one. So March 17th, I debited snow blower expense. I credited checking account. It was for $50 and check 002. So the source document, check 002. And you would just rinse and repeat that process all the way through. Make sense? Do you need to do any more with me? I can do more. You're good? Okay. So here's the assignment. So again, I'm not gonna say, but you would just continue on, right? Doing all the transactions. We're just not gonna worry about that. So new business. I don't think we've done this business yet. So Dr. Condrito's chart of accounts. So Dr. Condrito is a dentist, okay? So you're looking at a dentist's accounting. So they've got 4 asset accounts, okay? So remember for the assets, debit is plus, credit is minus. You've got 2 liabilities accounts. So credit is plus, debit is minus. You've got your 3 owner's equity accounts. So the capital has credit being plus, debit being minus. Drawings, debit is plus, credit is minus. Revenue, I can never remember revenue. I always get this one backwards in my brain. Hold on, let me grab my other sheet. Revenue, debit is the plus, right? No, credit is the plus. I can never remember. This is my kryptonite. Revenue, credit is the plus. So for revenue, credit is the plus, debit is the minus. And for expenses, debit is the plus, credit is the minus. Okay. So those are your accounts that you're dealing with. So these are the names that you have to use when you're doing your general journal. Okay. So you're going to use the word cash instead of checking account. Okay. So don't worry about doing opening balances because I didn't give you any opening balances. So you're just going to do the general journal transactions. So what you may want to do before you do anything, and again, you don't have to do this if you don't want, is figure out which account is being debited and which account is being credited for each transaction. You don't have to do that, but if you want to, you can. And then once you've figured that out, you're going to use Google Classroom and do the general journal on Google Classroom. Okay, so you're not doing this one by paper pencil. You're going to do this one in the lab. Okay, so what time's our bell go here? 12:35. So we've still got about 20 minutes. So I think what we'll do for today, for right now, just go through and write the debit credit beside each one. Okay, decide which 2 accounts are at play. And then tomorrow I'll meet you in the lab. You can open up the general journal, which is day 3, and fill in the general journal. Okay? Alrighty.